g'day there traders and friends, market participants and enthusiasts right around the world. Thanks for joining me on this Wednesday afternoon market recap. Today's date is the 4th of April 2018. Again, today during Wednesday's session we saw the markets collectively gap to the downside. The Dow Jones Industrial Average at one point was down very close to 500 points. However, we staged a very strong intraday rally. The same is true for the S&P 500 and the Nasdaq. Collectively, they are once again pushing off from these rising long-term 200-day simple moving averages, and we closed the day in the green, up 230 points. Again, volatility continues to remain relatively elevated as we see the definitive push off from this rising 200-day simple moving average. Not the nicest of market environments. However, one thing does remain quite clear and true to this current session close is that the support area that we have identified, again, coinciding with this secondary retest of this support area over here, appears to be holding. And as such, again, to go back to our thesis, or at least the blueprint of the market, the way in which, of course, we're seeing the market through the perspective of a technical trader is that this open window, I know it's hard to believe, it's hard to imagine, but all the way up here for the Dow Jones Industrial Average, 26,435 is going to be a really realistic target moving forward if we do see, again, a genuine and legitimate bounce off from the support area. Now, if I continue with the discussion with the Dow Jones Industrial Average, you can see for yourself that if you pay attention to these oscillating indicators, the stochastics has definitively crossed back on up. This is what we'd like to see off from, again, a very important macro support area. The RSI is already adjusting out of that oversold territory, and surprise, surprise, the MACD is now very close to giving us a buy signal. So it looks as though momentum is shifting. It is shifting off this support area that we have, again, identified. And it's looking as though if this is going to be the true push, again, the jury's not out, so to speak. We still have a little overhead gap up here, which is registering just above 24,500. Once we break above this gap, if we do, and above this downward sloping short-term resistance area, which really defines that of potentially a descending triangle, well, hold on, because this market is going to move very aggressively back up to retest these old resistance areas. If I move into the S&P 500 again, you can see the candlestick session today. We did see, again, another rather large gap to the downside. We closed up 30 points. Just to recap, what we have established today as at the close on Wednesday is that of another engulfing candlestick. This is a very strong buy signal. In fact, it is the strongest of two-day reversal patterns, this of course being bullish off from this general vicinity, or at least the location on the chart. If I go back into the Dow Jones Industrial Average again, you can see this outside day candlestick. This is what we call an engulfing candle at support, a very strong buy signal for those of you who look at candlesticks. It is very important to understand, of course, sentiment and the psychology of traders. When you see these gap downs, they can be, again, a little bit concerning. However, as soon as that gap down was made very early on in the session, or at least to begin the session, we saw collectively and really throughout the entirety of the session, just buyers, buyers, and buyers show on back up to push these markets off from their rising 200 simple moving averages. So again, you can see on the S&P 500, it's pulling in just off that 2,591 area. If I bring up, of course, the oscillating indicators, you can see for yourself the Stokes is starting to cross. The RSI is already adjusting relatively a little bit faster anyway, like it always does. And the MACD, although it isn't as close as the Dow Jones Industrial Average to registering that buy signal, you can see that the fast line is moving back towards that slower line. And we should see this actually cross relatively soon if we see this continue to advance off from the current levels. Now, again, I've shared with you potential buy points off from this area. These green areas of support have been very important. They are holding, and as such, we've got a multiple of bullish entry points. I shared with you on Monday that for me personally, I jumped in towards the lows over here on Monday's candlestick, positioning long on SPY calls. Those calls are dated for June, so I'm holding 250 strikes on the spiders off from this intraday reversal over here on Monday, and this is looking quite good. But again, once we start to overcome some of these bullish triggers up here, again, I'll be adding to my position moving forward with my ultimate target on the S&P 500 all the way up here at 2,852. Of course, allow for some volatility to continue. It would be great to see this just be very clean push off from these support areas. It doesn't have to play out this way, and again, we can sort of get stuck here really indefinitely, really. But sooner rather than later, we should see these markets continue to push off from these support areas that we've been hammering into for about a week now. Now, again, this extends into the Nasdaq. Obviously, a lot of tech companies have been getting absolutely clobbered, whether or not you have been paying attention to, say, Facebook or Amazon or Netflix, even Apple, more so 2 weeks ago. They've all been under, relatively speaking, a lot of pressure. We have seen, of course, a lot of that relieved as of today. You can see, again, another outside day candlestick on the Nasdaq. We closed up 100 points. Very different, of course, to the way in which we opened, but we also have on the Nasdaq what we call a shaved bottom long day Morobosu candlestick, which is also an outside day engulfing. So as soon as we gap down, we traded off from those lows immediately, hence why we don't have an actual lower wick. So again, a very strong buy signal off from the Nasdaq. If you wanted to jump into the Qs or start legging into the Qs if you haven't already done so, again, we are more or less holding this green rectangular box. And it's a really fantastic opportunity because it looks as though, as I have been describing to you, that we are still in this sideways range-bound market. We're simply oscillating between that of support and resistance. So across the board collectively, it looks as though the strength is finally showing up at the support. And it's happy days, so to speak, as we advance further into April. Now, what I didn't do on Monday was actually recap some of those individual stocks. It was really that first intraday reversal that we saw set up at this location, but we have a few more candlesticks, so to speak, another 2 more additional days to work with. And the picture itself is pardon me, is changing with this. As you can see, Apple has got another outside day candlestick. We haven't been triggered into a trade, but it looks as though this support area is holding, which is fantastic. Amazon, again, if I can bring up this rising 50-day exponential moving average, we did overshoot it to the downside. However, we have seen a tremendous amount of support show up with elevated volume, and we are still, of course, if I can bring up the right template, above not only the 200 simple moving average, but also that 100 rising simple moving average. Although I'm not looking to jump into Amazon personally, in a couple more sessions, it may be a decent trade moving forward. However, I do have better news for you when it comes to other individual stocks, namely Boeing Airlines. Now, yesterday we got very close to triggering above $331 per share. We've been paying attention to the support area. I've been describing to the students in that analysis class over the weekend how this is very reminiscent of the industrial average, but also that of an individual stock at support, which is just simply moving through the ebbs and flows of a channel, a sideways moving channel. And as you can see, it was looking as though we were actually going to trigger yesterday. Today, however, we have a very strong bullish candlestick. Although we're still below 331, it wouldn't surprise me if we actually began to trigger on this stock as at the open tomorrow, that of course being Thursday. So pay attention to Boeing Airlines. A pretty decent trade moving forward. We've got Baidu, which has run into 217. That was the secondary target. First target was down here at 227, so that's a good, pretty decent little trade. We're at that support. It's not ready yet. We do have an outside day candlestick. But again, I'm looking at this coming all the way on back up to close the gap at 250 at a minimum moving forward. This should also potentially trigger as at the open tomorrow. We have Caterpillar, which is potentially one of my favorite stocks. We've had 2 areas of support, one being the green, but also a secondary box down here. It's a different color. The reason for that is because it is a very important support area, and it's also the false breakout of potentially this descending triangle. It is also horizontal support dating back to October and November 2017. So as you can see, we tagged it today, and again, we have another long day white Morobosu candlestick. I love these types of trades. You have a decision to make. You can keep your entry at 151, or you can even bring it down slightly lower to about 146. I'm going to do that now for you. Okay, down to about 146.76. And again, this is the potential. Let me actually undo that. I want to duplicate the trigger from where it was, just so the old existing trigger is still there. But again, this is where you can begin entering into positions, and you can add to them above 151 if you choose to do so. Target on this is up here at about 170. This is a really decent trade that's continuing to form, and it's working out right at our support box. We've got COP. This is something that we actually legged out of on this specific date here. I remember this very clearly, but again, it's still lingering below its resistance. What I wouldn't be doing right now, just a major disclaimer, is jumping into really any stocks that are looking to break above their respective highs. The market obviously isn't set up to really support that at the moment. The markets themselves, or at least the industrial average, the Qs, or in other words, the Nasdaq and the S&P 500, obviously they've pulled quite a distance away from their respective highs. So we're not really looking to trade breakouts of individual stocks above their respective resistance areas. More so, we want to align ourselves with a bunch of stocks that are pulling back into support and have a really nice risk and reward ratio, which is going to take us back up into resistance. Now, obviously, COP is a little bit more advanced. It's already up at the resistance area. So I think collectively, or at least for me, and speaking on behalf of myself, I'm simply forgetting about COP at this particular time. CVX has been somewhat of a frustrating trade. We've had two entries on this, 113 and 116. Although I do like the candlesticks, we still haven't seen that absolute grit, so to speak, that's really pushing us back up above or even above 118.50. I'm still looking at this going to 130 or at a minimum up to 124. This is something that we've had to hold, potentially a little bit longer than what we would have ideally liked to. But having said that, it's still looking quite good as well. So I'm being pretty patient with CVX, or as patient as what we can possibly be. Google, again, another tech stock, obviously seeing another outside day candlestick, another healthy buy signal off from this support area. We had our entry at $1,050. This was a really decent trade, by the way, over here. Well, first of all, 1,054 up to this Fibonacci resistance area we sold off, and then there was a secondary trade up to close what was that open window. Since then, we didn't take advantage of this sell-off, but we've been waiting to play the bounce. The bounce is looking to materialize at the moment, and I want you to understand that the target on this, now that we have established the gap over here, this was about the midpoint of the trading month of March. This now becomes the target at 1,133. So over the coming weeks, if not potentially months, maybe by the month of May, we should be back up here at 1,131. However, looking back sort of historically over the past 1 to 2 months, this could happen also very, very quickly. And we might see before the month is out, that of course being April, we might already be back up here at 1,131. But that's the graph, at least, of that particular stock. Some pretty healthy sort of roots coming through. It's all looking quite good as well. Goldman Sachs is something we haven't really been looking to trade, and I would encourage you to really stay away from Goldman Sachs at this particular point. IBM, another outside day, long day Morobozu, pretty decent candlestick. These are really lovely reversal candles, and it is showing up once again at this at this support area, not resistance. So 155 is a legitimate entry now that this has materialized. I hope you're above all else understanding why it's so important to at least pay attention to the ranges of the market, or at least understand the market structure, the actual market indices, and how this is obviously going to affect that of the individual companies that are housed within them. Because once you understand, of course, the market analysis, or where certain people are identifying turning points on market indices, you can at least expect to see some sudden reversals on these, or at least pertinent to individual companies as well. And that's why we've been rather reluctant to actually go short this market, and we've been looking to play the bounce. And I hope you've taken full advantage of that. Netflix, again, not the strongest of reversal candlesticks. It is still that of a reversal candle, but it's not as nice, clearly, as the outside day type of candle that we just saw on IBM. It is a reversal candlestick regardless, and it is showing up on this rising 50. So the last trade here was 296. This is a legitimate entry, and this is going to take us all the way back up to 324 at a minimum. If we see Netflix, Google, Amazon, Apple in synchronicity back up at resistance, and we see the Qs all the way back up there as well, then we could be, of course, describing that of a potential breakout, but we're going to have to pay attention to the ADX and the CCI. I'm imagining that the ADX is going to be a little extended once we get up into this resistance areas, and I think we should see a little bit of volatility. But if we can hold above these exponential moving averages when we do get up here, that sets the platform potentially for, again, the macro trend to advance above the most recent swing highs that we've pretty much placed in or priced in the month of February, if not March, for those that are a little bit later to the party, or at least peaking before this subsequent intermediate correction that we've just pretty much sat through, and is what is appearing to actually reverse and sort of move back into synchronicity with the larger macro trend. Now, I was going to say the final stock to sort of round this out would be Tesla, but I'll also have a look at gold and silver as well, and also the US dollar. We've had two targets on this, or actually three targets, 285, 262, and 244. I was saying a number of months ago that, pay attention to the potential breakdown. It was starting to get a little bit frustrating whenever we were on the precipice of breaking down. We always saw these like really rough, sort of very quick advancements to the upside. We saw the bottom fall out of Tesla. And I mean, personally, I was looking at 250. I was, speaking about 250 as my personal target. I ended up sitting out of the 317 short. I wish I didn't, but that is the honest and absolute truth. As you can see, we've pretty much tagged all three of these targets now. And essentially what we're doing is at the close today is just closing the actual open windows. Now, we've actually done that. The problem with Tesla, though, is that this sort of chart pattern is coinciding with that of a larger sort of back test of this actual support area turning new resistance. So although I am getting relatively bullish with the majority of these individual stocks, Tesla still remains the outlier. And above all else, at this time, Tesla is still relatively bearish. So I wouldn't be looking to go long Tesla. This is most likely going to come all the way back up to maybe 310, if not 320 a share. And then you should be looking to actually play the role. Okay, I wouldn't be going long Tesla. Just a major disclaimer right now, although it does look appealing. It does have a lot of volume, support volume around this 250. You have to understand that we have sold off from 360. And potentially there might be a larger sort of bearish trend underway, which is sort of just forming at the moment. So I wouldn't be looking to rush into that individual stock at this particular time. Now, let me just bring up gold, of course, and also silver. There's a lot of volatility in the commodities markets at the moment. I've never seen so many awkward gaps back and forth. I mean, I started with this gap here most recently towards the end of March. We had a secondary gap over here just a couple of sessions later. Then we've seen gaps in the opposite direction. We've sort of stabilized, potentially back testing this descending triangle. And then, of course, we've seen another gap to the upside, which was looking relatively healthy on Monday. And again, even today during Wednesday's session, we saw another gap up. However, it was sold. This is a very bearish candlestick. I mean, I wouldn't pay too much attention to all of these suspension gaps. These are 24-hour gaps. The reason we see such gaps with the GLD and SLV ETFs is because obviously they're traded around the clock and then it just adjusts to the current market price. And of course, that's factored into the ETF price. And that's why we're left with a bunch of large gaps generally when the market's open each and every day. But this is a very bearish signal. This is a candlestick that's actually traded during the market, or at least the open hours of the US trading session. And because of this, it looks as though simply we're going to be stuck. And it really works quite well because when you look at the US dollar, it's still failing to definitively break above all of this resistance. I'm still looking at the US dollar ultimately, if I can move my chart back on over. I'm still looking at the US dollar coming up to 91, 92, 93 potentially. And that should act as some short-term selling pressure for both GLD and SLV. But once we get up into this area and potentially roll, this is going to coincide with a larger bearish downtrend. That's going to be the definitive bottom on GLD and SLV. If we start breaking, however, the support area, on the US dollar, well, then we should see, of course, gold and silver just essentially break out from its current levels. But before we do that, I still expect the US dollar to actually appreciate a little bit, or at least gain a little bit of purchasing power before we see that next big wave of selling pressure. The same is true for silver. Everything I've just said about gold is applicable to silver, although, of course, the candlestick is different. We're left with the doji. The reason I suggest that we are left with the doji is because we are respecting this pivot that we've been running into since the very early stages of the month of February. So you can see for yourself that we're just touching back in at about this 1525 pivot. Let me just double check that. It's 1529 actually. And as long as we're sort of in this area, I wouldn't be going anywhere near silver, not until we see the US dollar either break out, okay, and make that lower high up in that red rectangular box, and then that would be the opportunity to go long. And the same is true for GLD. Otherwise, you can use the breakout trigger on GLD to actually execute you into SLV positions if you want to use contingency orders through the options form or through your broker, depending on who you choose to trade with. So a little bit to recap, it's all very exciting. It's all well and good, so to speak, and I am very, happy and excited about the progress in which these markets are making. They are respecting that rising 200 simple moving average. I was thinking, potentially that the Nasdaq might sort of push on down a little bit lower, but it appears as though it's not going to. But the good news above all else is that the Dow and the S&P 500 have come down and definitively run into that rising 200 period. This is something that hasn't actually occurred since the mid stages of 2016. So a very long time in the works, so to speak. We've done it, and potentially we're starting to see that bounce. Quite amazed actually about the intraday reversal that took place across the board for all of the US markets. So if you have any questions, please email me, success@pivotpoint-trading.com. Other than that, everyone, enjoy your Wednesday evening, and I'll be back with you later in the week for another market analysis update. All right. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Farewell.